Good morning, all. CamelbackTrading.org coming to you this Wednesday morning, September 30th. Last day of the third quarter. We're looking at the SPY ETF's market profile here on Window Trade. I have it spread out like this for a very important reason. As of right now, with just about 75 minutes to go prior to the opening, we've been trading at the lower end of yesterday's range, even looking below it a bunch of times. The reason I'm showing you in this way to start with, here is the weekly gap fill. Here is the daily gap fill, right? The weekly gap is only 40 somewhat ticks, 42 ticks. The daily gap is 204 as they attempt to come out of balance to the downside. So we can go back to here for now. Just quickly, I think one thing anybody and everybody who watched that debate last night, whether you're an American or not, can say you'll never get those 90 minutes back to your life. Plain and simple. The only good thing that came out of it is I know I will not be turning in for the next two for even a second. I'll watch the vice presidential debate next week. I think that's important also. But at least I know not to watch the next two debates, as it was a debacle. Okay, let's get to what's really important today. We have the last day of the quarter. It's been a pretty good quarter. We're trying to come out of a two-day balance right now to the downside and attempt to fill a weekly and daily gap. Let's go over destinations and a game plan. So for the upside, if we gap lower, then yesterday's low of 331.62 would be your first upside destination. Then we have our pre-market high, overnight high of 333.65, which, not coincidentally, is not far off the afternoon rally high of 333.89 from yesterday, 334.77 daily high, and 334.96 daily high. For the downside, if we do not gap lower, then we'll use yesterday's low of 331.62. Then we have the two gap fills. Weekly gap at 331.20, daily gap at 329.58. If we are to fill those two gaps and get acceleration, then we have the 25th to deal with, right? We had a tremendous trend day up. 5 sets of single prints in the SPY that have held. So, first thing you would do is trade M's range from that day if you get accepted into it, which is a little bit over $1. And then I'll just give you the single prints really quickly. 328.15 get filled at 14. 327.99 get filled at 76. 327.22 get filled at 11. 326.86 get filled at 40. And 326.08 get filled at 325.86. And that daily low, incredibly, is $5 or $4 low at 321.64. So please write those down because I will not be giving them again. So what is the game plan for this morning? Well, we've been teetering in and out of yesterday's range. If we don't gap lower but then take out yesterday's low, I would expect at least the weekly gap to fill, and I would take a put play against that. Probably take a 332 or 333 put to give myself some room against M's low, against yesterday's low, to see at least the weekly gap fill. If we start getting acceleration, you hold on to it and see if we get the daily gap. That would be one put play. If in the next 70 minutes we do gap lower, but we gap lower where we're taking out the weekly gap, but not the daily gap, and the gap is fairly large, right, over $1, then I'm going to wait for market-generated information, right? You know how I feel about that. I don't want to take a put play looking to fill the daily gap only to have some inventory adjustment. I would wait to see if that happens. If we don't fill the gap, then I would get on board to see if we come down and fill the daily gap. So those are two put plays early. As far as a call play, again, do I really want to be a buyer against yesterday's low? You're going to have lower value. I mean, you can, but I would certainly be out if we take out yesterday's low. The better call play for me would be to see if we don't take out yesterday's low or take it out and come back in, and then in B period start one time framing up and get accepted into M's range, and then we know the history of M, right? It wasn't that big a range yesterday. It was under $1. But in B period, if you were to start one time framing up and get accepted, a lot would change there. Number one, you'd be back in value. Number two, you'd be one time framing up, which means number three, the odds of trade in all of M period would be very good. So that would be the better call play as far as I'm concerned. Yes, you could take one right down here out below yesterday's low. Again, those are two early plays on each side of the market. You're getting this profile live stream with my play-by-play from 9:15 to 4 p.m. every day as this incredibly volatile end of 2020 is about to start. So we'll see if they try. Again, it's been a good quarter. Does that mean they're going to try to mark it up? It all remains to be seen. Now, let's go to the charts. Again, they're still about $4 above it, right? Exactly $4 above it. But buyers want to make sure they don't have a disastrous end to this quarter and end below 327.73, right? Do I see that happening? Not in particular, especially since you have all those single prints and everything, but I don't put anything past this market. So if we close above 327.73, we're in a 2-month balance. Weekly, we're in balance. Buyers are trying to hold the gap, right? Sellers will love to fill it. And the daily, right now, it's a 2-day balance. The 50-day moving average for the past 2 days has basically become a very big ceiling that they haven't been able to get over. They are above the 5-day balance. The bulls want to take out yesterday's high, or at least stay inside of yesterday and then attempt to attack the 50-day tomorrow. Bears certainly want to fill these gaps, the weekly and the daily, and get accepted back into this 5-day balance. Remember, 319.80 right now is the monthly low. We have a weekly low of 319.64 and another weekly low of 319.25. That's an incredible target on the bull's back. So if you get any acceptance into this 5-day balance, that's what they're going to be gunning for in the near future. Good luck trading today. Have a great day, and we'll recap at 4 p.m.